The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. You have markets in the green across the board right now, but we're giving up some of those gains. S&P's up by 6 points right now, trading at 63.41. NASDAQ 100. See a little bit of selling coming into this market just in the last 35 minutes or so, and you see the volume ramping up on that 9 o'clock bar. NASDAQ 100, you're positive by 4 points right now. We've given up almost 100 points from where we were overnight, but positive nonetheless. Dow up by 65 points or 0.2%, and the Russell up by 0.6% or 12 points at 2263. Bitcoin, a little bit of volatility over the weekend. We're right near highs, 118,000, up $465. Ethereum, it's not stopping on Ethereum, right? This thing was on a tear last week. You have now gotten above the 1-to-1 on Ethereum from 1387. If you're saying to yourself, what's the asset class I should be buying at those lows? Well, Ethereum was one of them, man. You are up from 1387 to 3802, and you have completed the 1-to-1, A to B, C to D, and we broke above that B point with volume, right? July 11th. You break above there with Ethereum volume. That was 10 days ago. And since then, you're up almost $1,000. But yeah, you're right at the 1-to-1. If you're looking for the 1 to 1.618, where does it bring you? 46.16. And you're talking about approaching the highs, right? 46.16. Basically touching. We got up there at 4,900. But it looks like that's where Ethereum wants to go. Remarkable enough. Not sure Bitcoin's going to take another acceleration on that, as you've seen a little bit of a divergence with Ethereum far outperforming Bitcoin. You see a little bit of selling. Okay, last week, look at that volume we had on Bitcoin last week, right? And the bar actually turns red. And we actually finished last week. Okay, you close it out on Bitcoin at 117,670, which is about $500 below the prior week's bar. Okay, so you trade lower, you do it with volume on Bitcoin, Bitcoin pulling back a bit, and Ethereum having a moment, to say the least. We jump over to yields right now, 4.37. That's where we were when I was putting out the newsletters this morning. Let's see if we're there right now. We're about that level, but you got higher price, you got lower yield. We're at 4.37. Yes, we are. And you jump over to the dollar right now. And yeah, with lower yield, you have dollar weakness coming at you. You've seen how many times this dollar can get a small bid. All that is a bounce within a negative downward trending market. You have the dollar approaching a 98 handle, 97 handle. And we were down there for a brief moment. But you got the dollar rolling over from last night, 98.50 to 98. The market taking notice of lower yields, weaker dollar. And that's giving gold a lift this morning, with gold approaching $3,400. You're up $38 right now, up 1.1% at $33.96. Now, longer term on gold, putting it back to a weekly, you're chopping around at this 1-to-1. The thing that's going to be tough on gold, if you're looking at price and volume, folks, all right, the timing of the trade methodology, we got huge volume at this top, man. It is going to take a tremendous amount of volume to trade over the highs of 3,500, and we've seen nothing like that to the upside recently. You put gold back on the daily, right? Check out the volume. April 22nd, 35.09. We're trading at 33.95 right now. You see the volume on Fridays, a little blip higher on gold, and we're popping this morning, though, and we're going to get some action on gold, with gold up by $38 at 1.1%. You jump over to silver, catching a bit as well, up about 1% to 38.84 from a high of 39.557 last week. And you take a look at the weekly, right? Silver. In the same way Ethereum outperforming gold recently, you have silver outperforming gold recently, with silver this morning up about 1%. One of the silver stocks, folks, if you're looking to test out the gold report, okay, new issue out this morning. One of the equities I was taking a look at is First Majestic. Now, boy, you take a look at this thing, okay? You go back 5 years. Look at this $8 price point, right? That's where we trade down to when this thing really falls apart in 2022. You get a little bit of a blip in April of 23. That's exactly where we go in April of 2024. That's your high in October of last year as well, $8 range. You break above that area in June, so weekly chart. You accelerate higher yet again on July 7th. Would have been nice to see a greater expansion in volume, but that's big volume 2 weeks ago. And then last week, you pull back, but you do so on lighter volume. Today, we're already up 20 cents on AG. Okay, and that is what you like to see, right? You break above that area, you come back, you test it with volume. We do not have a position in that equity yet, but that's one of the ones I'm watching. And if we can find a bid here, you show me another sign of strength, which we may get today. Today may be the confirmation. And boy, if that's a breakaway from that $8 area, you're talking about a time span of 5 years that's been resistance. And for the bulls out there, you're looking for that to turn into support. And the last part on this equity, take a look at the monthly. That is a month to be seen, man. Right? Puts everything else to shame in terms of the type of volume, how you trade higher, more people in the store, more demand, etc. So First Majestic, put it on your radar. Some of the others out there, Pan American. Strong numbers last month for June. Put this back on a weekly. And you can see much more volume on Pan American last week versus the prior, versus when you put it to an equity like First Majestic. Okay, much less volume, right? You trade higher on 141 million shares. You pull back on 88 million shares in this technical area. Where are you coming back to test? You're coming back to test the high of the week of June 2nd when you did 212 million shares. We just traded lower last week on 88 million shares. Yeah, you jump over the XAU, HUI. They had some deep pullbacks last week. Now, you may see a reversal. You got AG, First Majestic. You're up 20 cents on an $8 stock this morning. So you're going to get a pop on the open on the XAU and the HUI. Gold up by $40. And these ETFs, just chopping around right at the 1-to-1. Look how perfect it was. XAU, 1-to-1 exactly. HUI, 1-to-1 exactly. Now, what's remarkable is that lines up exactly with gold. Okay? Gold contract, this is not always the case. An exact 1-to-1 with the XAU, HUI, gold contract, all doing perfect 1-to-1s as you consolidate around this area. And we've been consolidating here for a period of about 3 months, with gold up by $37 this morning. Jump back to the dollar at 98.08. All right, so we get some tech earnings kicking things off last week, of course. Last week, we started with some equities. Netflix shares trading lower on their numbers last week. This morning, you're going to be flat at about $12.10 for Netflix. But yeah, we get Google coming out on Wednesday. GOOG. Google shares going to be up by $1.50 on the open. You're trading at $187. You also get Tesla on Wednesday as well. Tesla up by $5. Get the S&Ps up by 5, NASDAQ 100 up by 2 points. NVIDIA shares flat this morning. We'll come right back. Don't go away, folks. Got a lot to cover. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We take a look at NVIDIA, the powerhouse of this market, man. NVIDIA shares going to be slightly in the green this morning. And you take a look at last week's action. NVIDIA, we trade higher on almost 1 billion shares. Jacking up this volume to make it as clear as possible. I mean, that's climbing volume. Now, you really had the expansion the week of June 23rd. You break above the 150 price point, which had been the highs of 2024. That was the highs of the year. You break that with volume. Last week, a little bit lighter volume than even that week. Okay, but it's been a strong volume, man. NVIDIA's in its own universe in terms of the way that it is trading higher. We do have a little bit of a gap there. You got some volume on a mixed day, but nonetheless, strong numbers from NVIDIA. All right, let's talk a little bit of Amazon. Amazon shares, you get quite the volume on June 27th. We're trading right now. You trade higher on Friday. Amazon shares going to open slightly in the green this morning. But yeah, the Journal's got an article. Now, Amazon's getting called out, but they're the retailer. But boy, you take a look at them versus Target versus Walmart. It's interesting the differences going on. Now, the headline here, okay, is that after pledging, come on, where's my, there it is. After pledging to keep prices low, Amazon hiked them on hundreds of essentials. While Walmart cut prices on low-cost goods, Amazon has raised them. Remarkable to figure out how the algorithm is pushing this one as to why. But nonetheless, if you're looking for your Campbell's Chunky New England clam chowder, well, that clam chowder is going to cost you 30% more than it cost you on January 20th. $2.58 versus $1.98. Now, you can see the anecdote, and I say anecdotal, okay? They're presenting hundreds of items, 2,500 items found, Amazon quietly raised prices on low-cost products, deodorant, protein shakes, pet care items. I would argue the protein shakes are not low-cost items, but I guess when you look at the context of low-cost versus more expensive items. But here's where it's interesting. The more expensive items, okay, Amazon cut prices on expensive items while raising them on cheap goods. But the more expensive items, they're not cutting them as much as even the competitors, right? And of course, Amazon denies it, says the items are not representative. Yeah, you're going to get a lot of articles like this, okay? And, these prices now, the number that they put in here, overall, prices on inexpensive goods like these increased by 5% in July. Here's the problem with articles like this, okay? Is that they cherry pick they do 2,500 items. They take the top 15 and highlight those. And yeah, you're getting slammed, man. I like that Yogi tea. I don't think I've had Blueberry Slim, whatever that one is, but I do like that Yogi branded tea. They're good teas. But the average increase is 5%. So you got many items out there that are in the 3% range, right? To get the average at 5, and these are the high numbers out there, you're going to have some decreases in there as well. But you're still talking about a 5.2% increase. And look at the ramp up in the month of June and July. Okay, now Walmart, you take a look at these in terms of Walmart and Target. Yeah, Walmart actually bringing down the cost on cheaper items. They might be trying to grab market share during this. That's what I found myself thinking when I was reading that most of all. And Walmart has talked about that, saying in times of hardship, okay, they see an opportunity to compete on price, gain market share, right? Gain market share in the higher echelons of income, etc. Walmart just off the highs. Take a look at the volume. Yeah, there was some selling. July 10th. Let's put Walmart on the weekly here. Yeah. A lot of buying. A lot of big weeks where you get a lot of buying on this equity. Green across the board on those big weeks. Okay, so we talked about Amazon. Let's talk about pricing for the market. When you talk about forward growth, price for perfection. Well, it doesn't have to be perfect, would be my opinion, but it's priced pretty well. This one from Bloomberg over the weekend. And, really, I just want to bring up the chart in terms of talking about earnings here. Now, tariffs, yeah, we got some wild tariff rates, okay? But take a look at where the earnings and the multiples of this market are priced, and boy, you're approaching some lofty levels, man. This is the forward price to earnings ratio, let alone the depths when we got the pullback in the market in 2022. Okay, we were still sitting at an 18 forward PE at the depths of the tariff problems, and we're now pushing the highs of the PE where we were to kick off the year, and that's pretty close to where we were at the market highs of 2020 and 2021. And we're coming into important earnings, as I mentioned. Now, we get Google, we get Tesla, we get many other companies. You get Verizon, you get IBM, you get Chipotle this week. Okay, we're really going to kick into it in the following week. You're going to get more of those tech earnings as well. And next Wednesday, we get a Fed meeting on top of that. Okay. All right. And they go into the details and the so forth. But, as we come into this earnings season, right, remember this chart because it's an important one, because earnings are what are driving this market right now. The Fed is going to be in focus. The market's pricing in some cuts. Okay, but we're coming into an earnings season where, boy, these companies are going to spend a lot of money on CapEx, right? Where's the earnings going to be? Where it's going to be for the future? And any deviation when you're priced at a multiple like this, I mean, you got companies like Walmart. I've talked about it before. The multiples on a company like even Walmart, and listen, they deserve it with how they're running their company, what they're doing. If you listen to the program, Darth, let's talk a little Sam's. They're doing a lot of things well. okay? But you got multiples that they have to now come into, right? And I did hit up Sam's this weekend. Hit up Sam's yesterday at about noon. Man, that place was packed. They were rocking. Everybody Sunday at Sam's, right? Costco, I'm sure the same deal. Stocking up for the week. Yeah. And I'll tell you, folks, this is where you really realize how far things have to come so quickly. Yes, sir. That's right. So check it out. If you've never used it, folks, all right, it's called Scan and Go at Sam's. I got to get a Walmart sponsorship, man. Even just some free credits in the store, right? A barter deal. Folks, if you're a member of Sam's, this is going to come to Walmart. It's coming, okay? Scan and Go. You put items in your cart, okay? You just scan them in your app, you pay for it, and you walk out the store, and it scans everything. And every time I go there on a Sunday, and there's 400 people sitting at the checkout, waiting to check out, waiting for an aisle, I'm like, this is going to change. Like in the next year or two, nobody's going to be using checkout aisles. Somehow everybody still does it at Sam's. I say everybody. There's no reason for it. You can do everything on your app, and Walmart gets it done. S&P up by 9. We're coming right back, folks.
It's like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have equity markets open. You got markets green across the board right now. We got the S&Ps trading up 12 points. Let's put it back to a 15-minute. You see the highs made early Friday of 63.57. We basically come into the early hours of the market right near the highs of where we were at the open on Friday as well. And right now we're positive by 12 points in the S&P's NASDAQ 100, up by 0.25%, 23,282, Dow up 96, and the Russell up by 11. All right, let's take a look at those yields. We climb up to a high of about 111.07. We get the 10-year up by 12 ticks right now. And the dollar just above 98, 98.09, and gold catching a bid today up by $37 and a little bit of a weaker dollar. And that is going to be the trend, folks. Fed is in focus, man, every single day. We have until May, and the pressure on this Federal Reserve chairman is nonstop, man. Every single moment I take a look at, whether it's Bloomberg, Wall Street Journal, CNBC, okay, or it's just constant shade. Calls for a review of the entire Federal Reserve, the Treasury Secretary says. Whether it's going to go beyond the current controversy, okay? He wants lower rates. He's part of the administration. Okay, he's an administration member. When you go on both sides, right? People who can't stand Biden, they couldn't stand Yellen because she was a member of the administration. It's the same thing with this gentleman. Okay, so take it for what it is, that's where it is. We do need to examine the entire Federal Reserve institution and whether they've been successful. So what he's saying is that an impartial Fed is not a good thing because the current president that appointed him to his cabinet thinks that rates should be lower. Has the organization succeeded in its mission? Well, it's a bummer how political it gets everywhere, okay? But can someone even tell me how that works? Tell me the context of that besides just throwing shade for the president. And this is just what does that even mean? Has it been successful? So what's the alternative? What's the alternative to that? I mean, let's have reasonable conversations, right? What is the alternative to an independent Federal Reserve? That you get a Treasury Secretary appointed by a president that says that they're the ones that know best? Folks, we all want lower rates, okay? All of us. And we have a habit of just everything just gets forgotten in the past, right? I mean, you go through no matter what it is, right? And time passes, and then you forget like it's even a thing. And so I don't even know what that means besides a bunch of hogwash. I mean, it just doesn't, it's just, what's the alternative? That's what I don't understand. What is the alternative? The alternative is that politics run the interest rate regime, and that is a worrisome prospect going forward, not just for the U.S., for things that are tied dramatically to everything across the board. They were fear-mongering over tariffs, and thus far we've seen very little inflation. Somebody send that guy that Amazon article I just sent, okay? And yeah, inflation has come down. They probably have room for a cut or two. There's always going to be disagreements when you have an independent Fed, and the truth probably lies somewhere in between, folks. And yes, okay, our debt is out of control. It would really be great if the market just let us pay less than the current interest rate on our massive debt that we have. But what I always found perplexing is that when Biden was in office and the Fed was in focus, all the attention got put on the fiscal laws being passed that were inflationary. At the same time that the people that are in the administration are arguing that the Fed is acting erroneously and harming the economy and forcing higher rates, they're passing fiscal policies that need fantastical growth that no one is analyzing right now and is just hopeful to not be inflationary when you look at the debt that's going to be added for the inflation. So it goes, well, I just don't understand. But no matter what, the pressure's on, okay? You look at rates, yeah, there is room for a cut or two. I think Powell knows that. He said that, okay? He said that he's fairly sure that they're still restrictive. They don't want to be restrictive in the longer term. So there's room for rates to be lower, and we're only 10 months out, and every single day there's an assault, and we're not going to get a cut in July. But if we don't get a cut in September, man, you think the pressure's on right now? It's going to come. And then the next step is, okay, so then you get a new Fed chair and we get lower rates, okay? The only risk to lower rates is the economy overheating, okay? We all love it. I joke all the time with friends, with coworkers, with investors. So let's go, man. Bring them to zero, right? Bring them to zero right now. Let's do it. Real estate prices will go up 20% overnight, right? You ever cut the overnight lending rate by 2 percentage points? Now, that's not going to happen because the market would lose its mind. That's when the market will force some of these policies, okay? You put a Fed chair in there that drops interest rates 200 basis points overnight, as the president suggested, you'd see inflation numbers spike so high you wouldn't even be able to get your head straight. And they would, because of the supportive nature that something like that would be. Imagine where real estate prices would ever go, folks. Imagine the equity that would be released in homes, right? So what's the risk? Well, the risk is that happens, okay? The only risk is that they then have to come back, correct the economy, and raise rates. So over the next year, I find myself thinking, right? So here's where this goes. We're going to get lower rates. The only real risk is, yeah, that overheats the economy, okay? And I think that might have to be what happens to actually bring down where the debt is. That's a risk. It's a risk this administration is willing to take. Okay, because that is the risk. Powell's not willing to take that risk. Many on the right feel like Powell should be taking that risk. It's not a risk, right? They feel like the risk is not that great compared to the risk of waiting, where they're hurting the economy. So let's say you start cutting rates. You start cutting rates, there's no longer a risk to hurting the economy. You're going to get the stimulus. The risk when we start getting those rate cuts is then going to transition to inflationary overheating with the need to raise rates again. So let's say rates come down, okay? Asset prices appreciate. You're going to be able to buy more house, right? You're going to be able to do all of that. Housing's a big one, okay? That's going to be one of the biggest factors that really comes down. Those housing prices, people are going to be able to pay more with their signature. My dad would always say, it's what you can sign for. All right, it's what you can sign for is what you have. Because if you can sign for it, you have it. That's why the Fed's so important. So I would look for asset prices in this scenario to accelerate, which is why the President and the Treasury Secretary want this to happen. Okay, of course they're going to accelerate. But if that's the case, you better watch those numbers, man, because there's a very real chance that you get that acceleration and that things possibly overheat, and then we have to raise rates again, and that would be the trouble. We're going to talk about it when we get back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You got markets pushing near all-time highs. S&P is your 5 points away from that price range right now, and NASDAQ 100, you just did it, man. We just hit all-time highs. 23,342. We're just off that price level. NASDAQ 100. There's an acceleration for you on the open, man. We're up by 120 points right now, 23,343. Amazon catches a lift, up by 0.6%. Oh, look at NVIDIA. What's going on here? They're not allowed to sell NVIDIA. Somebody tell the market what's going on. No selling NVIDIA. I kid. Down by 0.2% right now for NVIDIA. We jump around to some of the other chip stocks. Oracle shares flat. AMD shares up by 1% right now. Intel shares up by 2.5%. There's a little bit of a lift for you on the open. Jump around to Google shares. Ooh, all right. They're getting in Google. Now, Google's got their numbers on Wednesday. You're up by 2%. $3.61 up to $189.55 for Google. We also get Tesla. They give it back on the open. They're out with their numbers on Wednesday as well. All right. Let's talk a little car companies. You go over to Ford, up by 1.1% right now. GM up by 0.3%. So Stellantis down by 1.6%. And yeah, come out with their story. So they expect a net loss of how about almost $2.7 billion in the first half of the year amid pre-tax net charges of early effects of tariffs. Oof. Pull it over, man. You're talking about numbers. These car companies. So you're talking about Stellantis, Jeep, Dodge, Fiat, Chrysler. Estimated first half net revenue 74.3 billion euros, down from 85 billion from the same period last year. Nothing like shaving 10 billion euros off for the first half of the year. It's a 15% hit in revenue. Early stage actions taken to improve profitability. 3.3 billion euros of pre-tax net charges. Adverse impacts to adjusted earnings from higher industrial costs. 300 million euros in its first half results due to net tariffs incurred. So they come out next Tuesday with their numbers, but nonetheless getting a little bit ahead of that and dropping that they're going to deal with some woes when it comes to expenses and profitability. We take a look at Stellantis. Look at this equity. You sell down on the tariff lows, and we're barely up off of that price level. Let's take a look at the monthly. Yeah, look at that selling, right? April's going to stick out like a big one, but look at the selling. We might go lower on volume on Stellantis, man. You know, it's still got 100 million shares to do. What's it, July 21st right now? Oof, we got 9 trading days left in the month, man, and we've already done 400 million shares. Yeah, look at this spike volume you got on July 15th. Boy, watch out for that equity. Not sure you're going to break it on a weekly, but on a monthly, you actually may break the lows with volume on Stellantis, which would just be, you know, if you asked me at the beginning of July if you ever could make it. Now you got earnings which might do it. Oof, that's a rough looking chart for Stellantis. We take a look at Tesla on a little bit of a longer term look. Tesla slightly in green today. You make the lows during the pullback in April. You get the sell-off on June 5th when Elon goes to war with the president online. Yeah, put these two numbers on your chart if you're trading Tesla. About 300 and 400. That's a nice range you're in between right now. All right, you get the highs out there from 2021. Not quite the spike high, but that is the area that you consolidated in before you rolled over in the beginning of this year as well. You catch a little bit of a bid on that 300 area, which is the highs. Those would be your areas. Look to buy it around 300, look to sell it around 400. You break below that level, and watch out. You might be testing the lows of April for Tesla. Talk about a market on fire, baby. Yeah, NVIDIA back in the green. That's right. The market was listening. Look at Google catching a bid ahead of their earnings. Up by 2.3%. You're $18 off the all-time highs of 208.70 made earlier this year before that pullback in February. Now, when you talk about earnings, all right, I was reading this morning. The mega caps, okay, we talked about the future earnings. These big companies are driving everything. That's been the case, and that is the case. The capex on these companies is just bonkers. But they can do it because they're driving everything in the market. Magnificent Seven, okay, you're looking for huge growth on the Magnificent Seven, maybe 14%. On the other companies, maybe 3.4%. Okay, you're looking for huge growth in the tech stocks, and boy, they better have it. Now, what I found myself thinking this weekend, okay, I'm looking at the charts. I was putting together market insights. I was putting together the gold report this weekend, folks. New issue out both this morning. New issue of the gold report out this morning. New issue market insights. Check out both. 30-day money back guarantee. Check them out. Great time, especially the gold report. New issues out on Monday. Check that out. I think I got like 40 charts in that gold report, folks. Okay, charts for each equity, multiple charts from multiple equities in there, talking about the weekly, the monthly, gold, silver, XAU, HUI, right, yields, the dollar, etc. But when you look at these tech companies, okay, and I say to myself, boy, there's a real bull case here for earnings multiples to grow rapidly. Here's what I find myself saying. There's going to be a ceiling here. Now, it doesn't mean that the market can't go up. Okay, I think the dollar's going to face some weakness, which is going to be a lift for the market. Talk about a local top, right? Well, locally, we price the U.S. equities in dollars. You got a weaker dollar. If you're talking about how those equities and indices are priced in America, yeah, there's going to be a lift when you're pricing it in a weaker currency, which is our U.S. dollar, which may be the case if we get lower rates. Okay. But I say to myself, man, you know, what if this market is just poised for a huge acceleration on margins and profitability when you talk about the ability to be productivity with AI, right? You're talking about layoffs that are going to be made in these companies. But then I caught myself, and here's the double-edged sword there. There are vast possibilities of how productivity can be improved through the use of AI, okay? But you know what companies are going to do? Like Meta, for instance, it's probably up 2% today. Haven't even looked. What do we have? 1.6. This equity doesn't go down. If Google's higher, Meta's higher, though. They trade a lot. Look at Meta, up by 1.6% today, okay? You're going to have AI making huge productivity gains in the tech companies. They're not going to take that money to the bottom line, man. The race is to build out AI data centers, okay? Yes, they will improve productivity, but we are at a record time where CapEx is a differentiator to the likes we've almost never seen with the build out of these data centers and energy. So yes, there's a possibility for earnings, but it's always going to be curtailed from the ability, of those tech companies to want to take those earnings, as Zuckerberg has done, and plow it into growth. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we have the market literally to the tick high, 63.60 right now in the S&Ps. We are plowing higher. We haven't stopped from the open. Look at these green bars on a 5-minute basis right out of the gate. We opened at about 63.40. We're trading at 63.61. Market's in the green. We check back on yields right now. Yeah, higher price, lower yield coming back at you. We got the 10-year approaching 4.36. 4.36. And you get the dollar pulling back. We might see a 97 handle coming up on that dollar. You saw it briefly earlier this morning. And gold above 3,400. Gold trading up $43, up 1.3%, 34.0170. $3,400 for the price of gold. Folks, check out that gold report right under the newsletter tab at TFNN. You can try it. You get a 30-day money-back guarantee. And yeah, I think we're going to have some wind at gold's back. And what is going to be the impetus? Well, we got this high out here for gold, though. 35.09. You get some real volume on these 2 days where you pull back from 35.09. That's the 22nd and the 23rd of April. Okay, you move from 3,500 to 3,270 in 2 days. And we've been taking months to work through that area. But we got some strength today, man. We've only been higher on a couple occasions. Gold trading at 34.01. We check out the VIX right now. Now, here's the one thing you want to watch, man. We actually have an elevated VIX. Okay, you talk about some of those ratios Tim looks at, Tim Ward. All right, we have an elevated VIX from Friday with the market up dramatically. That should give you a little bit of pause, folks. Keeps the spikes up on your back as you have people paying up for insurance premium in a market that just keeps going higher. S&P's up 0.5%. NASDAQ 100 up 0.7% right now. And you got the Dow up by 0.3%. All right, folks, as I mentioned, right? These tech companies, they're getting in ahead. Look at Google, up by 2.5% right now ahead of their numbers. Tesla in the green. Meta up by 1.8%. Amazon up by 0.8% right now. Apple up by 1.7%. Markets higher to kick off the week. Folks, stay tuned. Basil Chapman, he's coming up next with the Tiger Technicians Hour. Steve Rhodes with the Trader's Edge. Fast Market at 12. Larry Pesavento at 1. I'll see you at 3 o'clock. Have a great Monday, everybody.